Thank you for tuning in to another great video by Destiny. Over the years, Margaret Lomas has answered hundreds of viewer questions about many aspects of property investing. Here's one of them.
Hi Margaret. We own a 3-bedroom house in Sydney's North Shore and are considering the option of selling and buying a bigger house. We have 3 children. We bought the house 5 years ago, brand new, but given what we've spent on landscaping, we don't think we'll make much from the sale. Given the current interest rate situation, would you advise holding off selling and buying in the same market, and for how long, or selling, buying sooner rather than later? Chris, from your question, I gather that you're thinking of upgrading your family home to a larger one and keeping the one that you're moving out of until such times as the market's better and more advantageous to sellers. In theory, this should mean that you buy now while the market's low and sell later when the market's higher. There are a few issues with this though. Firstly, depending upon the current mortgage on the house you live in now, the yields are likely to be very low and not enough to cover your holding costs. Higher priced homes tend to have relatively lower yields, and this makes the gap between what comes in and what goes out much greater. These holding costs soon add up, and if the sale takes longer than you'd hoped, it might eat into any increased value that you'll get from waiting to sell. Secondly, if your equity lies in the current home and you need to finance the new home to 100% of its value, your largest debt will most likely be the non-tax deductible one on this new home, while your lowest debt is on the old house, and that's going to be the tax deductible one. So you're very upside down financially. Thirdly, as you can only have one principal place of residence exemption, one of the 2 properties that you own will begin to accrue capital gains tax. If you choose for that to be the one you move out of, then any additional gain that you may make by holding on to it will be further reduced by capital gains tax. Next, while the North Shore might be considered to be blue chip, it doesn't follow that this is the best investment you can make. It's an area that has already had its boom, and now at top prices, movement upward will be significantly smaller. Other areas which are yet to be discovered have their greatest period of growth ahead of them. As an investment, your current home may not be the best that you can possibly do. It might be more advantageous for you to sell now, and while you are in the capital gains tax-free period, use any unencumbered proceeds to buy the new home, and then use the equity that you have in your new home to immediately leverage back into a 100% loan for a property situated in a true up-and-coming hotspot.
If you think you've learned something from this video and would like to become a better investor, give us a call. For more than 20 years, Margaret Lomas and her company, Destiny, have been helping investors to build substantial property portfolios using safe and successful strategies. Destiny is different because we don't sell property. We're truly your advocates for property investing success. To find out more, call now on 1300 693 378 or visit our website destiny.com.au.